Okay, welcome back. So since the last video, I just did one or two little things. I took our distribution costs and our admin expenses from our gross profit, and it left me with 149,300. There is nothing there. There's no heading necessary for that. And then the next thing, this other operating income is a heading. That's not this 6260, although it is really as well. But that's the discount. So under other operating income, I have put in discount. So if I go over here, I'll just show where it came from. I went down through, this time I'm looking for gains, really, other operating income or gains. So I go down through the credit side, and the only one I could identify is this here, 6260, which is the discount over there. And again, what I would say is you'll only know whether this discount is allowed or received if you know your sides in the trial balance. Okay. So over here we have discount, and then I am going to add, since it is a gain, add the discount to the 149,300, and I get, what's that? 0, 3, no, that's a 5, sorry. 5, 1. So 155,560 is my operating profit. Okay. Next, my profit on sale of land. So that's like my extraordinary item. And if we look here, we have land which cost 100 was sold for 180, so it's a straight profit of 80,000. Because we don't depreciate land, we don't have to worry about working out what the net book value was and trying to find out the profit on disposal or loss on disposal. So it's just subtracting. So 80,000 there for the profit on sale of land. And again, that's a type of gain. Okay. So it's going to be added on, but before we do, we're going to add on the investment income also. So if we look at the very top here, 9% investments, first of the first, means we had them from the very beginning of the year, 200,000. So it's 9% per year, and 9% of 200,000 is 18,000, isn't it? So we're going to put the 18,000 over here as well. That's a bit, 18,000. Okay, and then we can add the three of those up, and again there's a blank here, I suppose, so we don't have to put in any kind of a heading for what this figure is. So that's 560, 255, 560, wait a second, 253, that's, I can't read my own writing, 253, 560. Okay, so the next thing is the interest payable, and so there's a little bit of work to be done here, because it has the interest payable, the interest that you pay out is debenture interest. So we have 6% debentures, including 100,000 issued on the 1st of the 8th, 2005. So ordinarily it would just be get 6% of this, but it says we didn't have that loan of 280,000 all year long. We extended that loan, or increased that loan amount by 100,000 on the 1st of the 8th, which means at the start of the year, our loan amount was only, our debenture amount was only 180,000. So we're going to say that we had that 180 all year as a loan, and an extra 100,000 from the 1st of the 8th onwards to the end of the year. So I'm going to break it down and work it in two parts. I'm running out of room here, but I'm going to say if we had the 180 for 12 months, and it's what is it again, 6% per annum, 0.6. I think I'll do this in the calculator to be on the safe side. 10,800. Okay, and then the other 100,000 that we got on the 1st of the 8th was still going to be at 6%, but it's only going to be for 5 months, because there's 5 months from the 1st of the 8th to the 31st of the 12th. So further 100,000 of a loan, debenture loan, 6% again, but it's by 5/12 for 5 months. And again, I'll do this one on the calculator. I think, oh well, I could probably, what's that, 6,000 divided by 12, 500, 5 5s is 2,500, isn't it? Okay, and then 12, 13, 3. Okay, so, oh, sorry about that. So 13,3 is our interest payable in total. So up here we go to our interest payable, and we're going to put in 13,300. And we're subtracting, because that's money going out, isn't it? And that will give us our profit on ordinary activities before taxation, what we usually call our net profit, really. So if I subtract that, what's that? 260. So 240,260, and then it says taxation is the next thing that we must take from that, because that's money we're paying out again. And normally they just tell us what the fee for taxation is. They say either corporation tax or taxation, they'll call it. So in this case 40,000 you're paying out. So if I subtract the 40,000 from that profit before taxation, I get my profit after taxation. So 200,260. Okay, we're getting there now. Dividends paid and dividends proposed then. So our dividends paid should be in the trial balance here, and they call it interim dividends. So dividends that we paid part of the way through the year. So interim means, you know, we might have paid them after 6 months, and maybe we'll pay further dividends at the end of the year then. So 29,000 is my interim dividends, or we'll call them dividends paid in this case. So 29,000, and again, in some books you'll see, or in some answers, they'll put a second column here where they'll add up the paid and proposed and then bring it over here, but you don't need to. You can just put them all in the one column here. So what are the proposed dividends? What are we further saying we should be paying for this year also? Because remember, profit and loss account is everything you ought to be paying, even if you haven't just paid it yet. So if we look down here, it says provide for debenture interest due, investment income due, auditors fees. No, nothing there about it. Let me see. Oh, here it is, part 3. On the 1st of the 7th, 2005, the ordinary shareholders received an interim dividend of 21,000 and the preference shareholders received 8,000. The directors proposed the payment of the preference dividend due and a final dividend on ordinary shares to bring the total ordinary dividend to 15 cents per share. So there's a bit of work to be done in that. I'm going to do that in the next video.